again. This is the pole trade. It's the best first trade for newbies, especially those who are coming from other systems, those who are scalping 5 to 8 pips, those people who are finally realized that a moving average crossover is not going to work for them, and they want to learn to trade price action. Now, trading price action is a big, big thing, and it takes a lot of stuff to learn to trade price action. But if we break it down into little pieces, we can eat the elephant one bite at a time. All right. So don't forget, nobody's told you can make $3 million in here using this trade. The possibility exists you could sustain a loss of some or all of your initial investment. Therefore, never invest any money you cannot afford to lose. Okay, there's a disclaimer. All right, the pole pattern or rectangle is a very common and high probability trade with very low risk. Oh, have I got your attention? High probability, low risk. That kind of makes sense, doesn't it? They occur many times between the market times due to the lack of volatility. All right. So, for instance, the London session takes off at 3 o'clock Eastern Time, goes for about 2.5 hours, and then it goes to sleep. When's it going to wake up? 9:30 the next day, when the New York market wakes up. So, what happens during that period of time is we get consolidation. Consolidations create poles. They also occur when the big boys want to keep a move in place, but they now know there are not enough participants to keep it going, at least for now. So what do? They create a pole or a flag so that everybody knows what to do. Now, what's the two best things about them? Number one, they are easy to see. And number two, they have high statistical probability in the direction of the trend. So I went over to chartpatterns.com and I pulled this from there. And we can see how this works here. You've got, this is the flag, okay? The rectangle is this rectangle. Right? We call that consolidation. Bankers call that accumulation, all right? So rectangles should generally be traded as continuation patterns. They are indecision areas that are usually resolved in the direction of the trend. Research has shown that this is true far more often than not. So let me translate that for you. Statistically speaking, if you have a flag in here, you will have a high probability trade in the direction that you came into the flag. All right? So if you're in an uptrend, the statistical probability is it's going to keep the uptrend going. Just the opposite on a downtrend. All right? So we call it the pole, however, because we use the pole, not the flag. All right? So how do we trade them? The pattern is called the pole since before it breaks out as a continuation, it resembles a flagpole. All right? So here's the flag waving in the wind right here, but this is the pole that got us into that. And this is the critical thing for us right there. All right. So we measure the distance in pips of the pole part of the pattern, and when the momentum comes back in the market, they usually do a break, hook, and go on the breakout. And the target is whatever the pips were measured going into the flag. So let's look at a couple examples here. All right, so there's the flag. All right. Now I want to know, I know that statistically I went into this going up. That means statistically I'm going to go out going up. So what do I simply do? I measure that pole right there. But the whole pole is all the way to the top of the flag, but we only take the bottom part wherever the bottom of the flag is right here. We measure this amount right over here, and whatever this is right here, when it makes the breakout, that's what it's going to do. Oh, gee. He's so lucky. He just look at that. He must have just picked that out, the best one he could find. There's another one to the downside. There's the flag. Okay. Wow, this is a pretty good size move. Will it do that? Are you serious? We measure that. When it comes out the other side, oh, gee, did it again. Got it. All right. So typically the distance of the flagpole going into the flag will equal the distance coming out. That means you now have a great target that you can count on. Has nothing to do with a moving average crossover. Has nothing to do with my oscillator. My slow stochastic is overbought. All that crap. All right. So we now know we have a good target that we can count on, and we don't click out for 5. Yeah, man, but it's going to retrace. Of course it's going to retrace. 99% of all candles retrace. If you're not planning on a retracement, you're not paying attention to the market. All right. You don't get fear when that happens. You expect it. If you're not expecting it, you're not trading. You're gambling. Stop it. All right. Here's another big one. Look at that flag. This usually equals this. Will it do that? Yes. Statistically, they will do it. All right. Where do you put your stop? Typically, the stop is on the other side of actually the flag, not the pole. Sorry, I should say flag. All right. But check the real estate of the day. Many times there will be a head fake the opposite way before the move to the breakout. And your stop has to live through that. I'll show you what that looks like in a minute. So here's an example of where the stops are. All right, the stop is the red line here going up. It's 3 to 5 pips below this bottom right here. All right, going up. On a down move, it's 3 to 5 pips above this top. Because why? Well, they have a very solid top in here that says there are absolutely no buyers above here. All right, so down we go. All right. Now I want you to see that even over at chartpatterns.com, they tell you there's going to be a break, hook, and go. Break of the flag, hook back to the flag, and then go. Over here, break of the flag, hook back to the flag, and go. Break, hook, and go. All right. What about the head fake? Well, there's the flag. Can everybody see the head fake there? Before they went, they pushed to the upside. Why do they do that? So they can get the dumb money going the wrong way. And this is why you got to look at the real estate of the day. Because at the real estate of the day, you can see before that when that you would have had to place a stop above this red moving average, 3 to 5 pips. That may have stopped you out. I don't know how big that is. All right. All right. The safe place would have been above the T3 here. See, 3 to 5 pips above that. And now you can figure it out based on risk and reward. All right. So I know this is my potential reward right here to the downside. All right. So wherever I put my stop, as long as this area is smaller than this area, I have a viable trade. There's no rocket science here. Risk and reward. The decision to make a trade is never a trade setup. This is a trade setup. The decision to make a trade is not a trade setup. The decision to make a trade is based on risk and reward. All right. So how do you learn them? It takes a minimum of 300 images in your brain's database to recognize them. So you have to draw the pattern manually all at one time in the charts. All right. But it takes 24 hours to create a retrieval system to access the brain's database. So that means that you do any pattern, especially this one pattern on one day, do them all 300, and then you take the next day off and don't do any of them. And that allows you to get what we call reticular cognition. Reticular means your brain sees it automatically. Cognition means it understands it automatically. You don't even consciously have to think about it anymore. All right? So the pole trade is the best first trade for newbies to learn. So let's go in the charts to see if we can find a couple here. All right, so we just did that CAD, so we'll look at it again, okay? So we can see, here's a sideways move, right here. There's a sideways move. I got in it right here. That's how I got in it. So if I just measure that, actually in pips, but you can see they definitely made it. See that? That equaled that. See there? All right, another big sideways move now. Now this one we got in, let me just restart this one. This one we got in from down here up to here. All right, so whatever that is what we're going to do up there. So let's pull this down and see if that actually happened. All right, so let me draw it again. From here up to here, there's the flag, there's the pole. Would everybody say that equaled that right there? See that? And that's not hard, folks. My opportunity is whatever the pole is. All right? There's no rocket science here. Come on. No rocket science whatsoever. If you can master that, as Demetrius told you, 5,400 pips trading poles over there. Well, there's other stuff he traded. But as he said, hey, those poles seem to work pretty dang good. All right. So that's how you do it. It's not hard. All right.